JBlog, 17th of May 2009. Today we start looking at the New York Stock Exchange Composite Index on a weekly chart, and we can see this rally, this 8-week rally that ended with what I refer to as a topside blowout, parabolic. It was very steep, very long run. This last week came in correcting almost the entire move. I talked about that on the midweek update, and I believe that internally the market is no longer looking as good as it did. It needs a rest, it needs a pullback, and it needs to gather new strength in order to go higher. I had sold my long position, a lot of my long positions, a couple of weeks ago, midweek, and then at the beginning of the week I sold more of it, and I took some offsetting hedging positions against the longs that I wanted to keep, like Agrium and STLD. I put in a vertical spread, a vertical option spread, in order to hedge against a possible downturn and to make money on the downturn itself. Here looking at the week, at this week, these 5 days, I'll go to a different application where you can see it more clearly. This is now the S&P 500, and this is the last week. This was Friday, Thursday, Wednesday, Tuesday, Monday. So the Friday before that was the top for now. There are no new tops being formed. There was no new top being formed this week. And if you draw the trend line from down here, from the lowest point up through here, then that trend line was broken. Now that trend line only touched twice, so that's not a particularly good trend line. It touched over here, it touched over there. If it had touched one more time and bounced off, that would have been a stronger trend line. But we have another trend line here that is a little less steep, and that was touched once, twice, almost, 3 times, 4 times, and 5 times, and then sorry, I skipped here. 5 times here, but it too was penetrated right here. This certainly does not give me the idea that this market wants to go higher anytime soon. But again, we're traders, we're not investors, so we really don't care what the market does long term. We just care what it does right now. Right now it seems to be swinging down, so we're swinging along with it. I did take a position of SKF. I bought that at 40, and it is now at 47, so that's $7. So that's not a bad return. I took a very small position, less than 1% of my portfolio size, because SKF, if any of you have ever traded SKF, it is violent. You need a doctor's note in order to trade that one. Never take a large position in SKF. It will whack you so bad you don't even know what hit you. It goes from 40 up to 200, back down to 40 in heartbeat. But if you want movement, this is the one. Down here we had a penetration. We dropped below the stochastics 75. So again, that is looking bearish, and I am now looking for a continuing downturn to have this being oversold again. Now, what I mentioned before is I do not expect this to form a new low. The low in the S&P 500 was formed right here on March the 8th, March the 9th. I do not expect this low to fail, but again, I have learned not to try to predict the market. I just go along with the market. So I will stay short with SKF and add to that position slowly once it makes sense on the way down. Just like Dennis Gartman says, do more of what works, do less of what does not work. If a stock goes up, you buy more of it. If the stock goes down, you sell it, you short more of it as it goes down. Do not fall into the trap of selling things that are going up and buying things that are going down. It's always a bad idea unless you're really disciplined about it and you know why you're doing it. But don't just think, oh, it's cheap. It's cheap now. If we, for example, look at Agrium, again, one of the stocks that I um, I hold myself. It was back here at 87.50. Now it fell within a week or so. It fell down to 50, and there was a lot of people that jumped in at 50 and said, "Hey, it was at 87.50. It's at 50. It must be cheap now." Cheap, like cheap, i.e., it can't go any further down, is zero. It can always go further down. Nortel, if any of you remember a long time ago, or Cisco, or any of the dot-com stocks that traded huge surpluses and went down to penny stocks. So Agrium eventually fell down to 22.50 and then bottomed out there along with the rest of the market. Actually, it actually started before. There was another bottom right here, and it kind of picked up on this one because the agriculturals themselves got stronger. But again, this is a lot of people have lost a lot of money trying to guess the bottom, and it really is.